In this S&P 500 technical analysis, I will answer to these three questions. Why the S&P 500 moved up in the previous week? Why the S&P 500 failed even after coming into a strong bullish movement? And most important, why the S&P 500 is going to fail again in the coming week, the week of July 6th. Now the first question, why the S&P 500 moved up in the previous week? In my previous S&P 500 weekly technical analysis, I have mentioned that S&P 500 is now in a condition to move up and to get a gap up open or irrespective of any open, an initial or intraday bullish movement on Monday on 29th of June. And the most important part was here. On Monday in the midday update, I mentioned to my Patreon community members that now there is a strong condition of the formation of the bullish slip because the bearish crossover is not happening if the S&P 500 keeps on holding above the 7,400 psychological mark. In that case, S&P 500 will easily move into the 7,500 range by Thursday. This was the bullish slip. Why? Because there was no bearish crossover. And this was the reason why the S&P 500 still managed to move up on Tuesday also and entered a little into the 7,500. Again, because of the bullish slip. Now the answer to the second question, why the S&P 500 failed even when it has gained a strong bullish momentum. For that, the first reason was the overbought condition. S&P 500 came into the overbought through the lower level chart. This was extreme overbought and this was something that we have not seen in last 2 or 3 years. Extreme overbought. And then to make the matter worse, the trend line zone, which was in the 752X range. And where was the trend line? This was the trend line. This is why it was clear that by Wednesday S&P 500 bullish side will be limited, restricted. There will be heavy struggle and good chances of a failure, intraday failure. But that fall will be sudden and limited, not a heavy fall. And then again exactly the same was on Thursday. The same trend line and the same trend line zone in the 752X. Now answer to the third question, third and the most important question. Why the S&P 500 will fail again in the next week, the week of July 6th. For that, again the same reason. The first reason is the trend line and the zone created by the trend line in the 7,500 range and the overbought and the heavy trend line in the Dow Jones. These two conditions in the Dow Jones will put heavy pressure, downward pressure on the S&P 500, which is already under in the pressure, and in this manner the S&P 500 will fail again even if it moves up. The upward movement is not denied. Upward movement can happen, will be heavily restricted, there will be heavy struggle, but because of the Dow Jones there are very heavy chances that the entire market will fail. Now how soon we are going to see this the fall in the entire market, including the S&P 500 and the Nasdaq? And if there is a possibility for some more bullish movement deep into the 7,500, or if there is a possibility of the new all-time high or not, or it will simply come down and will enter into the 7,100 range. All of that I am going to discuss in detail in this S&P 500 weekly technical analysis, which is for the week of July 6th, means from July 6th, which is Monday, to July 10th, that will be Friday. Now guys, let me tell you that I have divided this S&P 500 weekly technical analysis in two parts. First part is the technical part. The second part is the probable movement. In the technical part, I will cover the weekly chart and the daily charts, all of the technicals and the percentage wise bullish or bearish on the lower level charts and the higher level charts. Probable movement means what is going to happen. Just like in the previous week, that there will be the bullish movement. There is a critical level. This level will define the bullish and the bearish movement. All of that, the probable movement, the fall, the rise, support and resistance levels, all of that in the probable movement section. So guys, I will start with the technical part first. So guys, this is the technical part, and I have divided the technical part into these two sections, the weekly chart and the daily chart. Okay, weekly chart means the long-term picture, means for a month, for a quarter or so. Daily chart is the short-term picture, for a day, for 2 days, or maximum for a week. First, I am going to start with the weekly chart. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. Let's first discuss the candle and let's deduce the long-term trend. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to get these daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now, this is the last weekly candle. It's a good bullish candle. However, the open price of this the candle and the closing price of this the candle both are within the body of this the red candle, the previous weekly red candle. This is indicating that there is some bullish movement and some bullish momentum, but it is not heavy that can trigger a good or a very heavy bullish movement or can help the S&P 500 to push or to move beyond and to make a new all-time high level. The candle is not heavy. The candle is simply indicating some bullishness. This some bullishness is not enough to trigger a gap up or an initial or intraday bullishness. This some bullishness means simply a neutral condition on the weekly chart. Now, whatever the Dow Jones will say, whatever the daily chart will say, this will move accordingly. The S&P 500 will move accordingly. Okay, why? Because this the bullish condition is not heavy. Now, what about the bearish condition? Because it's a good bullish candle, even though it has failed to clear the bearish candle, but still it's a good bullish candle, not a small or a thin bullish candle. That is why there is no bearishness. And these kind of situations are very rare when there comes a neutral indication through the weekly candle. Otherwise, weekly candles are always, means they always give a clear bearish or bullish picture, right? Now, this is the weekly chart of the Dow Jones. Look into this, the candle, it's a very heavy bullish candle, very heavy bullish candle. Secondly, the closing of the candle is almost near to its all-time high level. Number 3, this candle was responsible for an all-time high. All of this indicates a bullish movement, a gap up open on Monday, or irrespective of any open and initial or intraday bullish movement on Monday. Very, very clear. Now, there was some confusion, like there was the neutral condition through the S&P 500's own candle, but now because the Dow Jones, the candle of the Dow Jones is very, very much clear and is indicating a gap up or an initial or intraday bullish movement. This means that S&P 500 will simply copy the Dow Jones because it is already, the candle is indicating a neutral condition. Okay. Now the candle is clear. Now let's talk about the technical indicators, and technical indicators will clear all of the doubts. Now, through the technicals, S&P 500 is bullish through the moving averages, Ichimoku cloud and the Bollinger Bands on the weekly chart. The S&P 500 is bullish through the MACD on the weekly chart, but is bearish through the stochastic RSI on the weekly chart. Okay, S&P 500 is not in any kind of saturation or the overbought condition, but yes, if in the next week there comes a good green candle or a bullish movement in the next week, in that case S&P 500 is expected to hit the saturation and the divergence, and then that will make it unstable. So again, the S&P 500 on the weekly chart is 90% bullish and is still in the long-term bullish trend. Now comes the Dow Jones. Now Dow Jones is almost the same. The Dow Jones is also bullish through the Bollinger Bands, Ichimoku cloud and the moving averages on the weekly chart. Dow Jones is bullish through the MACD on the weekly chart. Dow Jones is bullish through the stochastic RSI on the weekly chart. Dow Jones is clearly overbought and saturated. And now the good thing is that on Monday, last week it failed, but it was very, very close. But on Monday, just a 1 point of green movement in the Dow Jones will trigger the K equal to D equal to 100 absolute saturation through the stochastic RSI, and because it is already in the overbought condition and heavy divergence, Dow Jones will become heavily unstable as soon as, doesn't matter whether it happens on Monday or Tuesday, as soon as it moves up and goes green, it will be unstable and will be in a condition to come down, like this kind of condition candle means it moves up, comes down, moves up, comes down. Okay, because it will have to do so in order to cool down the technicals. Absolute saturation. Okay, this indicates that Dow Jones is also 100% absolute bullish, 100% absolute bullish on the weekly chart, and the long-term trend is heavily bullish through the Dow Jones and also through the stochastic, through the S&P 500. But Dow Jones is unstable. It is unstable on the weekly chart and is highly susceptible for a fall. Not just normal fall, but a good fall in the coming week, the week of July 6th. Now, how soon we can expect this fall to happen? And what technical or what level will trigger this fall? For that, we need to check the daily chart. So let's move on to the daily chart to get a clear idea when exactly this is going to happen. Now guys, we are here and this is the daily chart. Daily chart means one candle represents one day, not 1 week or 1 hour. Okay. Now let's first discuss the candle. But guys, before that, so far if you have liked this video, then hit the hype button below this video on YouTube and also hit like to appreciate, and your appreciation matters a lot. Now this is the last daily candle of the S&P 500. So well, it's clearly a spindle. It's clearly a spindle. Secondly, this candle formed because of the rejection from the trend line and also below the 7,500 psychological mark. All of this indicates a gap down open on Monday, or irrespective of any open and initial or intraday bearish movement on Monday. This is through the daily chart. Now there is some confusion that if on the weekly chart the Dow Jones and S&P 500 are indicating a gap up open or irrespective of any open and initial or intraday bullish movement, then how this gap down is going to work. So before I discuss that, let's also discuss the daily candle of the Dow Jones. This is the daily candle of the Dow Jones and it's a strong, very strong bullish candle, and was also responsible for the all-time high, and the closing was above the previous candle. All of this indicates a gap up open on Monday, or irrespective of any open and initial or intraday bullish movement on Monday. So now it is clear that the Dow Jones on the weekly chart and the daily chart is indicating a gap up open, or irrespective of any open and initial or intraday bullish movement on Monday, right? There is some confusion only. That confusion is there only in the S&P 500. S&P 500 is showing neutral signs on the weekly chart and bearish signs on the daily chart. Okay, this means that even if there comes a gap up open, then also S&P 500 will come down. The Dow Jones may or may not come down, but S&P 500 will come down even if there comes a gap up open. And if there comes a gap down open on Monday, in that case S&P 500 will be in a condition to move up. This bullish movement will be supported by the Dow Jones. Whatever bearishness that will be there initially, that will be by the S&P 500. And yes, if the Dow Jones hits, means when it moves up and goes green, then it will hit the extreme overbought and the extreme saturation through the stochastic RSI, extreme divergence, then this will automatically come under pressure. Furthermore, the trend line. Okay, this is the trend line of the Dow Jones. This trend line will not allow the Dow Jones to move up. In this manner, no matter what happens, the market will come down, even if there is some bullishness because of the Dow Jones. But if it comes down at first, then it will get the reasons to move up. So in simple terms, there will be a counter movement. Okay, that's it. Now, what happens after the counter movement? The absolute movement. That absolute movement for the entire day, that will be different, will be governed by the levels, zones and the trend line. Now let's analyze the technical indicators to see the overbought or the oversold conditions. So S&P 500, just like on the weekly chart, S&P 500 is bullish through the Ichimoku cloud, Bollinger Bands and moving averages on the daily charts, and the S&P 500 is bearish. Yes, it is bearish through the MACD on the daily chart and is bullish through the stochastic RSI on the daily chart. In this manner, the S&P 500 is 80% bullish through the daily chart, right? Now, there is one very important thing here. It's been since 18th of May 2026. The MACD of the S&P 500 was trading bearish. Okay, this was the reason that even when S&P 500 tried to move up, it came down, tried to move up, it came down. Okay, but now the MACD is coming into a condition wherein we can expect a confirmed bullish crossover in the MACD. If this bullish crossover happens, and this must happen by Monday, because if it does not happen, then it will create this kind of condition here. Okay, Monday, and then by Tuesday there will be a bearish slip. Bearish slip means this kind of movement, fall and heavy fall. Okay, so if the S&P 500 gets a bullish crossover through the means in the MACD, in that case it will be a huge relief to the S&P 500. Then it will come into a condition to move up bullish and to sustain bullish and to even try for the all-time high. Why? Because from the next week onwards, after this week is over, okay, that will be the week of July 13th. The companies will start to post the earnings. Okay, and then the earning season will start, and the earning season is mostly, not always, but is mostly a bullish season for the stock market. Okay, this means that S&P 500 will have to sustain and survive this the next week, the week of July 6th, so that it comes into a comfortable position, into a comfortable condition to ride bullish or to trade and remain bullish through the earning season. It will get the natural support, okay, through the earnings of the companies. In this manner, the S&P 500 is 80% bullish on the daily chart. Dow Jones. Now, the Dow Jones on the daily chart is almost the same. Dow Jones is bullish through the moving averages, Bollinger Band, Ichimoku Cloud on the daily chart. And the Dow Jones is also bullish through the MACD and the stochastic RSI on the daily chart. Dow Jones is about to hit the absolute saturation and the overbought condition. And there is a clear confirmation of the stochastic RSI hitting the saturation. This means that the Dow Jones is also 100% absolute bullish on the daily chart, just like it was on the weekly chart, okay, and is in the long term and the short term bullish trend. There is no doubt about that, okay. But the problem is that on the weekly as well as on the daily chart, the Dow Jones is hitting the saturation. On the weekly chart, the situation is much worse because it is already in the overbought and is already trading at the saturation. But on the daily chart, it is expected to hit the saturation on Monday itself, and more saturation or heavy saturation and overbought on Tuesday if it remains and sustains bullish. This is the reason why the bullish movement may not continue or cannot continue, and there will be a fall. This fall is through the technicals, the technical indicators. Okay. Now, so this thing that I've discussed for the S&P 500, the MACD. Okay. Even though there is pressure through the Dow Jones, pressure means the heavy overbought condition and the extreme saturation and everything. Even though all of this is there, the pressure and everything is there, but still, if the S&P 500 manages to get a bullish crossover here in the MACD as early as on Monday, okay, and then it managed to sustain and hold the same on Tuesday, in that case, it will be clear that whatever fall that the Dow Jones is going to cause or is going to trigger to the entire market, that fall will not be heavy. That fall will be limited. Not heavy, but a limited fall, because then the S&P 500 will be in a condition to hold itself and to support the entire stock market. Okay, but the technicals alone will not work. Technicals cannot work alone because the levels and the zones are very, very heavy. Okay, the 744X level will be a very clear indication of the fall, whereas in the bull side, the trend line, the 752X, the range through the trend line will be, this will tell us whether there will be a potential new all-time high or not. Now, all of this will be clear in the next part, that is the probable movement. So let's move on to the next part or the next section, the probable movement section, where I will discuss all of these. And guys, before I move on to this, the next section, the probable movement section, I want to share this information with you that if you want to get these daily precise updates every day from Monday through Friday of the S&P 500 and the Dow Jones, also up to 100 opportunities in the premium stocks and the ETFs of the US stock market, and also the midweek update video technical analysis. And guys, if you notice, many people have joined my Patreon community for last many weeks, months and years. So guys, whenever you want to join my Patreon community, then I have given the link in the description of the video and also in the comment section. Now guys, let's discuss the second point of the agenda of this S&P 500 technical analysis. And here I will give you the probable movement. Probable movement means what is expected to happen in the S&P 500 in the coming week, the week of July 6th. Means from July 6th, which is Monday, to July 10th, that will be Friday. What will be the support and resistance levels, and what will be the maximum, the bullish side movement it can move, what will be the maximum fall, what will be the tiebreaker, what will happen to the technicals, overbought, oversold, all of these, the conditions. So next week, okay, first come first, the next week, the only news is that on Wednesday, on July 8th, the FOMC minutes of the meetings will be released, okay, and these minutes of the meetings will influence the movement of the stock market, because the stock market will get then some idea, okay, that how soon the market is going to see a rate hike, or if there will be the possibility of the pause. So this is the only significant news for the next week. Now let's talk about the numbers, levels, and the technical and all of these are conditions. So as I have discussed, these are weekly chart and the daily chart. It is clear that the stock market is still in the long-term bullish trend and is also even in the short-term bullish trend. Okay, it is all bullish, no bearishness, just the bullish. The only bearishness here is through the S&P 500 itself and not the Dow Jones. Okay, clear? Dow Jones is 100% absolute bullish on the weekly as well as on the daily chart, right? Now, Dow Jones is indicating a gap up open on Monday, or irrespective of any open, an initial or intraday bullish movement on Monday. Okay, and the S&P 500 is indicating a gap down open on Monday, or irrespective of any open, an initial or intraday bearish movement on Monday. Okay, how this will work? Because the weekly chart is indicating a strong bullish movement and a gap up open. This means that there will be more chances of a bullish open, a green open, a gap up open. Okay, but then the daily chart will come into the picture. Even if there comes a gap up open or an initial bullish movement, then it will bring it down. A counter movement will be there. Okay, now the bullish movement. What is the problem in the bullish movement? If you notice, there is the trend line. Okay, this trend line is there in the S&P 500 and also the same, that is the bearish side trend line. Okay, this is the trend line in the Dow Jones. Now when the S&P 500 moves up, remember S&P 500 closed at 7483.25. When it moves up, then my level is the 751x. My level is there in the 751x. Okay, and also around this the same, there is that trend line in the S&P 500. But now there is a problem. Now there are two trend lines. Okay, one is this one, the long, and the second one which is formed by this candle and this candle. Okay, now what does this mean? This means that these two trend lines are going to create a very heavy resistance. Okay, simple. Let's convert this into the numbers. 751x to 753x. Okay, the first trend line here is in the 751x. The second trend line is in the 753x. This means that the entire 751x to the 753x range is heavily guarded by the trend line. Number two, there are two levels. First level is in the 751x. The second level is in the 753x. These two levels and then the two trendline levels, this means that there is very heavy resistance zone from the 751x to the 753x. Bullishness will not happen, all-time high will not happen, nothing will happen in the bull side until and unless the S&P 500 clears the heavy resistance zone and there comes at least two consecutive daily closings. Two consecutive daily closings, remember, not one but two consecutive daily closings, and it will not be very easy for the S&P 500 to do so. That is actually the problem. For this to happen, there must come some external support, either a clear manipulation, clear and heavy manipulation, or some favorable comments from the president or some news from the Middle East, okay, or Hormuz or something like that, something very much favorable. Okay, then only S&P 500 will be able to clear and to sustain and to close above this strong resistance zone, else it will not. Okay, and as I mentioned that no bullishness will happen, nothing and no all-time high as long as it is the S&P 500 is trading up to, below or up to this. Okay, this means that the bullish side is now limited. Bullish side is what? Bullish side is limited. Furthermore, there is one more reason. This is the Dow Jones. Okay, Dow Jones closed at 52,900. The next trend line is around 53,000 or 53,100, somewhere around this is the trend line in the Dow Jones. Okay, but the trend line alone is not a problem. As I have discussed in the previous section, the daily chart and the weekly chart section, that as soon as the S&P, the Dow Jones moves up, it hits the absolute K equal to D equal to 100 on the weekly chart, absolute saturation. Okay, then and also this is not the only problem. It also hits the heavy overbought condition. It also hits the heavy divergence condition on the weekly chart. But again, this is not the only problem. There are multiple problems, but to make the matter worse, the daily chart is also creating a problem, because as soon as the Dow Jones moves up, then the daily chart also hits the overbought and also hits the saturation and also hit all of these are divergence. So for now the Dow Jones is very heavy. Technically it is very heavy. Without extreme manipulation it cannot hold. Even the news cannot support. It must only and only the extreme and the pure manipulation can help the Dow Jones to sustain bullish. Otherwise, it is impossible. Technically, it is impossible for the Dow Jones to sustain. Okay, and this picture is not just for Monday, but for the entire week. Okay, until July 10th, Friday. For the entire week, the Dow Jones will remain in this condition. Because see, if the Dow Jones goes like red, it gives a red candle, 1, 2 or 3 or 4 red candles, and then by Thursday or Friday, okay, it moves up again above the 52,900. Then again, it will hit that the condition on the weekly chart. This is the reason why I am saying that the bullish side movement is heavily restricted and is heavily limited, and the S&P 500, Dow Jones and the entire stock market is susceptible to fall, because the help that the market is in need of, the help, the Dow Jones, S&P 500, this help will come only in the week of July 13th, when the big ones will start to post the earnings. Okay, but there is no such help in the next week, the week of July 6th. There is no such help, and only a pure manipulation can help the S&P 500 and the Dow Jones to sustain bullish. Otherwise, technically, it is not possible. This means that the bullish side is now limited and is now restricted to the 751x, 753x to the S&P 500, and around 53,000 or 53,000 to 53,300 in the Dow Jones. That's it. Okay. Any movement beyond, not just beyond, but any movement beyond 52,900 is not sustainable in the Dow Jones. A movement beyond this particular zone is not sustainable. This means that for now, an all-time high is out of the picture. Again, I'm not denying this, the fact or the condition that an extreme manipulation can change the entire scenario. So extreme manipulation is out of the picture, and this is the technical analysis based on the numbers, levels, technicals, indicators and all of that. I'm telling you, bullish side is limited and restricted. Now then, what about the bearish side? If the bullish side is limited and restricted, what will happen to the bearish side? Sure, so let's discuss. But again, the same picture will be there. Okay, the same reasons, the same, but the levels and the numbers will change. But guys, before I discuss the bearish side, so far, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to get these daily precise updates of the S&P 500 every day from Monday through Friday, as well as up to 100 opportunities in the premium stocks, you can join my Patreon community. And guys, so far, if you have liked this video, then please hit like to appreciate, and also hit the hype button on YouTube, and your support matters a lot. Now the bearish factor. Bearish factor, again the same. Because the bullish side is limited, this means that even if because of the Dow Jones, the S&P 500 moves up and manages to hit the 53,000 or 53,200, 300 and push the S&P 500 to the boundary, the zone, then because of the Dow Jones, it will fail. The S&P 500 will fail because the Dow Jones itself will fail, right? And the S&P 500 is, as of now, is not sustainable above. Forget about above, not even in the zone. And as long as the S&P 500 is trading below the zone, there are no chances that it can sustain. Yes, the S&P 500 will remain in the fighting mode. Fighting mode means if the S&P 500, if the hourly closings, all hourly, 4 hourly closings, okay, or even the daily closings are above the 7,500 psychological mark, then the S&P 500 will again will try for the 751x, 753x. Okay, even though it is clear that it will not be able to sustain, but it will still again and again try, and will come into the consolidation. It will then consolidate. Why? Because it will be then the S&P 500 will be waiting for the week of July 13th, when the earning season starts and the stock market start to get the support through the companies, through the earnings of the companies. Okay, but now once the S&P 500 loses, and once it is confirmed that there is a confirmed closing, that there are the confirmed closings, hourly closings, 4 hourly closings and daily closings below the 7,500, then there are no chances that it can sustain and it can move up bullish. It will have to trade bearish. No matter what, it will have to trade bearish, and the only bearish support is 744x level. This 744x level is very, very heavy support. It has supported the S&P 500 in the last 3 days. Okay, most importantly on Thursday, because see, S&P 500 on Thursday it came down heavily and the low was 7427. Even many of my Patreon community members have asked that what happens when it loses the 744x level. Then I have repeatedly mentioned that nothing will happen. It will be recovered. S&P 500 will sharply recover, not just normal recovery, but there will be a sharp recovery, because the S&P 500 did not have power, did not have momentum, or did not have any reason to lose and to trade below the 744x level. There was no chances that the S&P 500 can sustain below the 744x. Yes, around like 2 or 4 points plus minus, that's fine, but not below that. That is why a fall, a breach means there will be a heavy recovery, and no matter what, the 7444 level will be recovered. This is the reason the S&P 500 will fail and will come down, but will hold at the 744x level, and the situation will remain under control and will remain bullish as long as the S&P 500 is holding at the 744x level. All hourly, 4 hourly and daily closings are above the 744x level. The situation will turn bearish and bad and worse only when the S&P 500 loses the 744x on the hourly, 4 hourly and then on the daily closing basis. And when that happens, in that case, S&P 500, the bullish side will be completely blocked, completely limited, completely restricted, and the bearish side will then be open to not just to the 7,300 but to the 7,200. Why? Because after 744x, the next heavy support is at the 736x. This is the next heavy support. Okay, there is an intermediate support that is not heavy, but the next heavy support to hold is the 736x. After losing the 736x, there is one more support in the 7,300. And okay, let me clear the screen. Let me make it more readable. So I was talking about the 744x. Okay, then comes the 736x. Okay, then comes the 732x. Okay, once the 732x is lost, then the next comes the 722x, 100 points. Okay, there is just one support in between these two, but that is not heavy. The only heavy support after that is the 722x. That is why I am saying that once the S&P 500 loses and trades below the 7,404x level, then the intermediate heavy support levels and even these the moving averages won't be able to hold, and the S&P 500 will have to give up, will have to come down. Okay, and then it will be clear that the bullish side is completely restricted and limited. The bearish side is open. Bearish side is easily open to the 722x. Okay, very simple. This is the range, the entire range, and especially to the level of 722x. Very simple. Okay. However, there is one more catch. Okay, this catch is that yes, Dow Jones, the only role of the Dow Jones is to put the pressure on the entire stock market and to bring it down. That's it. That is the only role of the Dow Jones. Okay, but for the S&P 500, once it loses the 744x level, it is coming down to the 736x level. Okay, holding at or around the 736x, and for the entire week, either at the 736x or at the 732x. For the entire week, the S&P 500 is holding within the 7,300 range. Simple. Okay, let's keep it simple. That within the S&P 500 is holding within the 7,300 range, and it is good that it is means it will be better if it is holding at the 732x at least. Okay, and then by July 10th, it closes above the 732x, at least 732x. Okay, in that case, what will happen? In that case, the next week, the week of July 13th, when that will be the earnings season, then by default the volatility will increase. This increase in the volatility and then the earnings, first the banks will start to post the earnings. Okay, combination of all of this will help the S&P 500 to remain and to sustain bullish and to recover the 7,400 and then to recover the 7,500. This is the trend line zone, to recover all, means to break all of these the barriers that are there in the bull side, and then there will be some possibility for the new all-time high to happen, otherwise not. Because if the S&P 500 before July 13th or before the companies start to post earning, if the S&P 500 has come down and is trading in the 7,000 range or the 7,100, this is the range, in that case it is already so much weak that even the companies won't be able to put the S&P 500 in a condition to make a new all-time high. Yes, 7,300, 7,400 will be possible because of the earnings season, that will be possible, but a new all-time high will not be possible. Okay, that will not be possible, right? This means that once the S&P 500 has come down, okay, and it is trading around, means it is holding within the 7,300 range, and as long as the S&P 500 is trading and is, sorry, not trading, but closing above hourly, 4 hourly and the daily closings above the 736x, okay, it will remain in a condition to try for the 7,404x, but then the 7,404x will be the bullish side maximum movement. That's it. That's it. 7,500 will not be there. The 7,500 will out of the picture because the bullish slip that has formed, it has already supported the S&P 500 to sustain. And this bullish slip will form. This was very much clear on Monday itself. That is why here I mentioned that when this bullish slip is forming, then we are looking for the 7,500 range by Thursday. This means that as soon as on Monday, okay, in my pre-market analysis, when the futures will be okay open and everything, then we will get to know what is going to happen, whether the market is going to first, it is going to come down, or if it is going to move up, and then what levels, means where exactly the S&P 500 and the Dow Jones are going to open, the open price we will get. Okay, then in my pre-market analysis and in the first update, okay, I will make it very much clear that how soon we are going to see the fall, or if there is even 1% chances, possibility for the market, for the S&P 500 and the Dow Jones to sustain on that day. Okay, so on Monday, within the first pre-market and the first update, it will be very much clear what is going to happen, not just on Monday, but for the entire week up to July 10th. So guys, just wait for my pre-market analysis and the first update on Monday. Okay, if you are my Patreon community member, and if you are not, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And guys, other than that, so far, if you like this video, then please hit like to appreciate, and also please hit the hype button to support. And guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you have any questions that you want to ask, then please feel free to ask your question through the comment section.